Welcome to the Rigatoni Capital podcast. I'm your host, Colin. It's the morning of March 12th. It is a rainy and sad day here on Wall Street. Last night we had some rolling storms, and that was interesting. This show is about long-term investing. I just want to remind people, I think it's cool I go over the news and everything, but it's not a show for trading. I think every show that does this kind of format where it goes over the news, it seems to be a show for traders, like I guess whatever hedging and trading and day trading and swing trading. That's not what this show is. It's really very boring long-term investing. We'll buy something like American Express and we'll probably never sell it. That's how boring we are here at Rigatoni Capital. I'll show you WTI actually was down to 90. It was at 99 when I went to bed last night. And then that's because of the those tankers that got blew up. And apparently, I guess we dropped to 93 already. And I don't know, a lot of it's fog of war. So I'm not really paying too much attention to the specifics. I'm not a Brent crude commodity trader, so I don't need to know the specifics. And of course, the market had sold off, and now it looked like it was kind of climbing back. I went to bed where the S&P was down a lot, and now look, the S&P, actually, this isn't true. Market closed last update March 11th. Well, long story short, I can actually give you that information. Yeah, S&P's down 0.69% pre-market. So the market hasn't opened up yet. And by the time this comes out, like I said, the news gets old anyway because of the news cycle. I mean, by the time I post this, it's 11 a.m. and people listen to it at 12 on their lunch break on the East Coast here, and the news is old by then. So, anyway, let's talk about the U.S. economic trade deficit. January trade report, the U.S. Commerce Department reported the trade deficit fell 25.3% to 54.5 billion in January. And that is the trade deficit for January. So it shows you exports rose a slight bit to 5.5%, led by gold and computers. Does that sound right? Gold. Imports fell 0.7%. So then why were we in a trade deficit? I'm really getting shitty news from Google Finance, in my opinion. Central bank watch, central bank watch, a hawkish shift, inflation fears, Fed outlook. Goldman Sachs has pushed back its forecast for Federal Reserve rate cuts to September and December, removing the previously expected June cut. Okay, that makes sense. Currency impact. The US dollar is near 2026 highs as a haven asset, while the euro and yen have seen significant losses against the greenback. Yeah, it's kind of like when oil was spiking, the dollar index was spiking. I don't know why that is the case, but that is what the economist said on Bloomberg last night. I was listening to it. The Dixie is 99, and in late January it was at 95. By the way, Bitcoin is having another little bump up over 70,000. I like it. I like it. I like to see Bitcoin consolidate before it makes its next leg higher. So this would be great. Rather than living in the low 60K range, it seems to like the 70K range now. I like it. And then of course, 10-year, we're at 4.22 right now. Corporate earnings and news. I'm reading off of Google Finance. I'm trying this format to see if this is any better. Campbell's shares plummeted to 7.1% after missing Q2 earnings estimates. Really nothing else here, guys, on corporate earnings that I'm interested in. It says Adobe and Ulta Beauty are reporting after hours today. So those are two big ones. And then, of course, we had Oracle come out, and I kind of went over Oracle's earnings yesterday. And let's see, what else do we have here? We had kind of like the Oracle data center type of stocks do well yesterday, and I think it's because of Oracle's earnings. That's my opinion, at least. And I'm going to show you my watch list. If you can see it, my watch list really doesn't change much. This is like the stocks I look at every single day, just narrowed down. So I have my portfolio, and then I have a watch list of stocks like I would be interested in adding to my positions or taking a whole new position, like a Goldman Sachs or an American Express. They would be brand new positions for me. Actually, I have Spotify on here too. I don't know why I have it on here. I kind of bought that and sold it, but mostly what I do is a buy and hold type of investor. And here's my top 20 holdings as of March 9th. I didn't feel like updating it yet from March 12th. So it might look a little bit healthier, but you can see in my top holdings, I always talk about this every day. I'm trying to give you an idea of what I'm doing. I'm long-term investing, and this photo will prove to you that I'm a long-term investor. So Nvidia, I'm up almost 4,000%. And something like Apple, I'm up 523%. Caterpillar, I'm up 400%. Lamb Research, I'm up 550%. So you get an idea of like I will not take profits, and I will hold things even when they seem expensive. And then you can see some of the other stocks I'm up like 100% or something. So do I sometimes trade or trim stuff? Sure, but it's unlikely. It's unlikely. Doesn't happen a lot. And Zero Hedge has a post here, which is funny because my friend at the gym mentioned the same thing yesterday. And I do this podcast every day, and I go over financial headline news. And I forgot about the fertilizer supplies. So the title is Energy Shock Threatens Fertilizer Supplies as Echoes of 2022 Food Price Spike Return. But I think the important part here is it's called Salt Trading Fertilizer. And this is extracting, and the guy at the gym knew everything about it, how it extracts like copper or some kind of something that we need. And then someone wrote, you can't even buy fertilizer right now. And I think that's the bigger concern for this coming crop in terms of what we're doing to fertility options. And yeah, I mean, like this is again a Hormuz, and it says the timing of the crisis is particularly worrying for the agricultural sector. Farmers in several countries are about to begin applying fertilizer for the upcoming crop cycles, meaning supply shock could directly affect crop yield. The uncertainty is also ripping across ammonia, sulfur, and phosphates markets, where trade has slowed. Think that's what it means. And then we actually did mention something along the lines of how this has some kind of like umbrella effect. Like it's one, you think it's just oil, but no, it's this, and then that means it's this, and it keeps spiraling on top of each other. You need the Strait of the Hormuz open. And so, yeah, I think that we all get the idea here that it's going to be a few weeks of pain, and then the data is going to reflect that. But if this war calms down in the next few weeks, which is what I would expect, then the data you'll be receiving, of course, will be old news, and the stock market won't trade on that anymore. Do you understand? So all the bad news is being baked in now into the stock market. And the S&P isn't even in a correction yet. So you don't have to buy when the VIX goes over 25. I made a mistake yesterday because sometimes I listen to myself talk, and I was saying when the VIX spikes over 25 or spikes over 30, you hold your nose and you buy. And there's a group of investors that do that, and that's fine. And it has worked for them. My suggestion was when the VIX does that and the S&P is also in a bear market or is below 10% in a correction, I would also buy. But the S&P wasn't the major indexes haven't been in a correction, and they're certainly not in a bear market. The Dow Jones was up 50,000, now it's up 47,000. The point I'm trying to make is I think what it is that because we're in this cyclical cycle, we're in this cyclical halo type of investment theme where the Caterpillars of the world and even the Goldman Sachs of the world prior to the sell-off in financials were really the hot stocks. And industrials were getting hot there, and raw materials were getting hot, and that kind of held. If you look at like an equal weight index, like it was doing well. and the market cap weighted indexes because of the Mag 7 didn't look as good as the equal weighted for the last like 5 months here. But because of the data center the build out of the data centers, it has caused a really wonky stock market where there's a good amount of stocks that did really well, and those are like industrial stocks that have a hand in the data center. That's what I think. I mean, if I'm wrong, then let me know. That's how I've read it. This post came out this morning. US reportedly has just 2 months of rare earths left. The US military's reliance on Chinese rare earth minerals is emerging as a strategic vulnerability as Washington's conflict with Iran unfolds, and President Donald Trump prepares for a closely watched visit to Beijing later this month. The war has intensified concerns about supply chains for the specialized minerals used in advanced weapons. So, didn't we already know this? Didn't we already understand the situation we had? China accounts for 71% of US rare earth imports between 2021 and 2024. Let's read that again. China accounted for 71% of US rare earth imports between the years 2021 and 2024. Beijing is likely to press the US to ease tariffs and export controls. Yeah. Here's another good quote. The Pentagon expended roughly 5.6 billion worth of munitions during the first 2 days of the operation. Missile stockpiles are more than sufficient to sustain the Iran war for at least 3 to 6 months. Okay, so this is something I keep talking about. If you listen to like the Jack Mahler's podcast, he talks about the same thing over and over again. The US centric mindset, the a lot of my friends that live in the US, they think yeah, we're great and that we can bully somebody around, but China, how do you bully China around with tariffs when they have all of the rare earths? They're refined rare earths. Everybody has rare earths, but the refineries are in China. And by the time we are able to refine them through like MP materials, it's a good stock. We should look at that stock lately. What's MP been doing? I don't own the stock. Just MP, yeah, really hasn't been doing anything since that one time it peaked. That was around when the US was taking stakes in rare earth type of companies. You guys remember that? I think they stopped that. They're a little preoccupied right now. This photo is of a gentleman we'll discuss in a second, but it says, when you listen to Trump and try to cross Hormuz, and then you see this photo of him in a life jacket looking like he's not bothered, but also in shock while a tanker is on fire in the Strait of Hormuz. Does anybody know who this guy is? Does anybody know who this guy is? Well, he became famous. He became famous. In fact, there's more photos. These are photos of Thai crew from attacked cargo ships shared online. So I don't really exactly understand what happened, but it sounds like they were even on the crew. They were like part of the crew, and then they got on a safety boat, and then they took photos that went viral globally. Check out these photos. This guy looks so stressed. I think he looks really stressed. I guess that is their tanker. The Thai-flagged bulk carrier was struck on March 11th while sailing near the strategic strait after departing. I'm not going to try to name all these ports and stuff, but in the United Arab Emirates, about 8:15 a.m. local time. Very cool. All right. All right. We talked about the energy shock threatens fertilizer supplies, so that's spooky. And I'm gonna switch gears. We're gonna go back and forth and back and forth. That's just the format of the show. So my friend Studio Innovation, who you can find on X, you can also find him on Substack, posted a quick video of it's only 45 seconds long, so bear with me. NVIDIA released a new video showing Jensen Huang taking a 2.5-hour ride across San Francisco in a Mercedes powered by its Alpamile autonomous driving system. Huang called the experience completely comfortable and confidence inspiring. So I'm going to try to zoom the video in. I'm going to try and play it. Okay? Actually, I can just press that button. Huh.
San Francisco today.
That's right.
This is really an exciting day for me, experiencing our production car. You know, this interchange here always gives me a lot of anxieties because there's so many different highways. You know, if you just miss one, you're gonna be late for about 45 minutes. When we were driving, the two of us were just talking, enjoying San Francisco, and it was just incredible.
Okay, we're hesitant because of this human. We're actually waiting.
That's so good. This is the way transportation should be like.
That's right.
100% comfortable, 100% confident, and completely revolutionary.
So cool. So cool. And then I thought this was interesting. Studio also posted a video that Anthropic launches personal computer, an always on local merge with Perplexity computer that works for you 24/7. It's personal, secure, and works across your files, apps, and sessions through a continuously running Mac Mini. Yeah, this is what I'm talking about. This is the future. And it's crazy that Anthropic partnered with Perplexity Computer. I thought they would be competitors, didn't you? And OpenAI obviously snatched the OpenClaw founder. So I guess both OpenClaw, and now you have Anthropic partners with Perplexity, and there seems to be like these allies forming, which is interesting. So let's play this video. Again, the point of this is just I'm showing you what the future looks like. And I might not play the whole video because people that are listening on Spotify, they don't give a crap. But we'll just check it out for a second.
Prioritize candidates with SwiftUI experience and draft an email to my investors, including a link to the briefing.
Got it. Re-ranking candidates for SwiftUI and launching Mail to draft an email to investors.
You guys get the idea? When people say they are concerned about white collar job losses, this is what they mean. Okay. Wall Street Journal says Atlassian is to cut about 10% of workforce as it ramps up AI spending. CEO Mike Cannon-Brookes says the company is working to reshape its workforce mix of skills as it adapts to the rise of AI. Well, that's what Jack Dorsey said, Block pretty much, in my opinion. And then I also heard that 2 days ago, Oracle announced that they're going to lay off like a big chunk of employees. And I'm going to get to my point of what I want to say about all of this stuff. And but what I want to say first is look, Atlassian, I'm probably saying the word wrong, approximately 16,000 employees work there. So if 10% of those employees are gone, I can't do math. What is that? That's only 1,600 employees. So is that right? Is that right? It's not a lot of employees, but the Oracle layoffs seem like they were pretty big, but I don't have confirmation of it. And it was funny how that kind of quietly went through the headlines. I mean, it didn't go through headlines, like major headlines. I didn't see it. And I look at financial news all day. But the point of this is what I want to say about it is that if you got Oracle and then you have this company and then you have Block, there's a group of people that said, oh, Blocks was just because they overhired during the pandemic and or after the pandemic, and that it's not that big of a deal. And then you have somebody like Andrew Yang come on CNBC yesterday, and he's saying it's really a huge deal, and in the next 12 months, we're going to have massive layoffs. My point is the truth might be somewhere in the middle. Have you ever thought of that? Where, yeah, you're going to see some white collar job layoffs probably because of AI and how good it's getting and how good it's going to get in the next 12 months. I don't think that's that crazy of a thing right now. And but is it going to destroy the economy and we're going to be in a recession? That I don't agree with. I think this could spur just even more growth. It could be a positive. But yeah, there are people that are going to get laid off by these large publicly traded tech companies that have too high of a head count. And if you know the culture of some of those Mag 7 companies like Meta and all these companies where these remote workers are young people and they posted their videos on TikTok of like their life working at one of these companies. I don't take it too seriously, but a lot of these people might be replaced by AI. because they weren't really doing much. It's like they worked an hour or two a day and then they spent half of the day in the pool. I probably sound like a boomer right now, but that's true. These big, large companies, they're so big, they have so many employees that they can't manage it. And Palantir has 4,500 employees, and AppLovin has 1,500 employees. I guarantee that culture is a lot different than someone like Salesforce that has 67,000 employees. I can guarantee it. Back to Vail, my favorite story of the week of how Western U.S. ski resorts have had a rocky season owing to a record snow drought. Oh, is that why? Because they all claimed it was because, is it because there wasn't a lot of snow? I thought it was because the economy wasn't doing so well. So I got fooled by fake headline news. Low snowfall sees Vail ski visits slump. Well, if you're telling me that the reason Vail's pulled back is not because of the consumer, the wealthy consumer that goes to these type of resorts, if you're telling me it has to do with just the snow, then I'm interested in Vail Resorts as a position because I can ride out weather patterns. Let's check out Vail Resorts, Vail Resorts, Vail Resorts. I'll have to do some research on Vail. I'll have to do some research on Vail. All right. So just wanted to let you know that Vail Resorts, it wasn't really the consumer here. I was saying yesterday in my podcast, like, oh, it's the same consumer. The wealthy consumer is now shopping at Walmart to save money. And that's why their Vail Resorts sales are down. Well, here I got fooled. They're telling me it's because of the snow drought. That's funny. Meta doubles down on custom inference chips after reportedly scrapping training chip. Just a reminder that the Meta custom silicon to power their AI workloads, I don't think this is going to help something like NVIDIA. This is a Broadcom story. And it says early in its recent conference call, Broadcom CEO Hock Tan sought to reassure investors that the custom chip specialist relationship with the social media giant was only getting stronger. And this kind of confirms that this came out 8 hours ago, or it came out yesterday. So again, when does this end, this whole custom inference chip story that does training and inference? It does two different things. And how does this start to eat into NVIDIA's margins? And how does this start to affect NVIDIA as a company? And remember, NVIDIA, they also made a deal and they snatched up the leader of Grok, not the leader, the CEO of Grok or the founder of Grok. And that's not Grok with a K, that's Grok with a Q. So NVIDIA is going to have to get into more of this type of training where it does inference as well. They just have to, because now they're going to end up playing defense if they don't, in my opinion. And I'm not selling NVIDIA. I trimmed my NVIDIA position last year in the year 2025. Hey, Alex Karp's on Palantir right now. I'll have to check that out. I mean, the CEO of Alex Karp, Palantir, is on CNBC right now. I'll have to check that out. Okay, let's go to a Charlie Bilello tweet. He says, in the first 5 months of the 2025 fiscal year, the U.S. federal government took in $2.1 trillion and spent $3.1 trillion. Don't try this at home, folks. Check this out, guys, if you can. Check this out. So you're in a 1 trillion, you're in a 1 point what? In the first 5 months, they took in 3.1, yeah, so 1 trillion deficit in just the first 5 months of their fiscal year. So let's say their fiscal year starts in October 2025, which it does. And then you're just going through current, which is the end of February. That's quite the trade deficit, isn't it? And what I want to show you here too, which I think on the left-hand side, you can see individual income taxes is the main source of the US income. And what I want to say about this is this will look a lot different, I guess, right? After tax season. Am I correct on that? Is any tax specialist out there might be able to confirm something like this? But I would assume that gets bigger during tax season, but I have no idea. I don't know how it works. What I'm trying to say is if the stock market doesn't go up, if the stock market continues to go up, that's also a nice tax for the US government, right? because of capital gains. I mean, long-term capital gains, short-term capital gains, and anytime you sell a stock for profit, you get taxed, of course. So my point is that doesn't the US government want the stock market to go up? Incredible that in just the first 5 months, net interest was this much, 425 billion, the third largest spend was just the net interest on our balance sheet. That's crazy. National defense is like not even in the one, two, three, four. National defense falls in the fifth largest expense. Okay, we're gonna get through this, guys. I found this interesting. Netflix to pay as much as 600 million for Ben Affleck's AI firm. I found this interesting. Wasn't Ben Affleck on Joe Rogan the other day, and he was kind of mentioning about how AI is not going to AI is not that impressive, and kind of saying how a lot of these AI firms are that they can do this, that, and this, and then their private equity goes up, and then they make a lot of money in that way. And he was kind of like talking shit on AI in the private markets and even talking shit probably on LLMs and all this stuff. But anyway, he does have an AI company. The patent covers a system where an AI model is trained on film footage to understand cinematic techniques, like how scenes are shot, visual logic, editorial consistency, and real-world production challenges. For example, missing shots, lighting issues, or continuity problems. It enables post-production fixes such as relighting, wire removal in stunts, background enhancements, or filling in coverage gaps, all while preserving the filmmaker's intent rather than generating new content from scratch. So the reason I'm bringing this up is because I own Netflix, and Netflix walked away from the Warner Brothers deal. And then when I looked at the headline, $600 million is no joke. That's a big chunk of money for something like this. Wouldn't you guys agree with that? That it seems like a lot of money? We can always ask Simeon McMillan, who is the expert on this type of media business, on what he thinks about this. But he never responded to me, and I did reach out to him to come back on the podcast, but he declined. He didn't decline, he just is probably busy. I want to show you this headline. It's just on Zero Hedge. Silver's bubble is deflating. And then they show you boring for longer and lower highs. The dollar's not helping the situation. It looks like a pair trade with the dollar index right now. My opinion on this is that it's not true. I think that silver is looking just fine to me. Silver is looking just fine to me. You want it to go up in a straight line and look like a meme type of trade? If it can go up slowly, there's nothing more dangerous than that. There's nothing more dangerous than silver going up slowly. So I don't know why you would mock silver right now. And if silver goes up, keeps going up in pricing, that's not good for the economy, guys. It's one of our largest inputs for everything. Okay, earnings whispers. Just a reminder, Adobe and Ulta Beauty is coming out today after hours. I don't even bother looking at a Dollar General or Dick's Sporting Goods. These retailers, again, they drive me crazy. I think that they're not great investments, but they are hot stocks, man. Costco, Walmart, even Casey's here that came out on Monday. These low margin type of retailers, you can make a lot of money in these guys, and I don't understand why. I just don't get it. But I've been wrong. I'm wrong on that. Okay, I just want to let you guys know that I haven't listened to this podcast yet. I started to last night and then I fell asleep. Shyam Sankar is the CTO of Palantir, and I highly suggest getting to know who this gentleman is. He's got a really interesting youth and how he was brought up, and he is super smart and super intelligent. And he was on the Invest Like the Best podcast with the Jim O'Shaughnessy. I think it's like the son. No, Patrick O'Shaughnessy. So definitely, if you own Palantir, you kind of have to listen to something like this. Now, if you own 10 shares of Palantir, you don't. But if you own over 100 shares of Palantir, you better listen to it. You have a nice investment in it. You have to know what's going on. And you're not a trader, you're an investor. So you have to know if this is the successor to Alex Karp. Is he the next CEO? He's got to be the next man in line. He's got to be. And I sure hope he is. And I sure hope it's written somewhere on a piece of paper. If anything, God forbid, were to happen to Alex Karp, this gentleman is the guy to step up and take the CEO position. I really hope so. But anyway, it's really fascinating. It's really interesting to understand his image of like the US Industrial Revolution and how Palantir is the key to this type of growth and this type of cyclical build out. And they really are a very fascinating company. And that's why I own the stock, even though it's the most expensive stock ever in history when it comes to a forward multiple or a price to sales ratio. Okay, this is from Simply Wall Street. This is the last thing. And we always talked about American Express. We talk about it every day. I might even buy American Express when the market opens this morning if it's trading below 300. I mean, I'm getting antsy here. I'm getting antsy here. I want to buy something, but I just have been holding off because I don't like the fact that the S&P hasn't corrected yet. This article says, is it time to reassess American Express, AXP, after the recent share price pullback? This is written by someone called Bailey Pemberton. He writes for Simply Wall Street. But what I found interesting and what I liked about this post, this article, it's a nice article showing you his analysis, is that I love this little section here where he gives you the bull case. He says fair value is 308 per share. So it's kind of trading in his fair value and his idea on the bull case end, 308. Let me give you some of his revenue growth assumption, 10.8%. Okay. So I'm guessing that's his annual growth assumption. But what he says here on just the bullets, this is American Express, focuses on product refreshes across about 40 cards and new card launches as key drivers for future revenue and earnings. Highlights acquisitions such as Resi, the app for when you make dinner plans. It's like Open Table, it's their competition. It's called Resi. So highlights acquisitions such as Resi and planned deals for Talk and Roam as ways to deepen the dining ecosystem and digital tools for merchants. Points to growing revenue base supported by card fee growth, membership model upgrades, and steady new card acquisitions. But here's the bear case. Fair value $284. So I think if I'm going to buy American Express, I want to buy it below $284 per share. Same implied revenue growth assumption around 10.4%, but flagged slower airline and entertainment spending, higher rewards costs, and pressure on small business customers as potential headwinds for revenue and margins. Rigatoni Capital said that. That was my whole bearish thesis on why American Express has pulled back in the first case. It's because we're concerned about this happening. We are concerned about the white collar job losses and that hurting their corporate end of things, their enterprise side of the business. And we're also concerned about inflation and that hurting travel and leisure. And obviously jet fuel pricing is going up now and all this bad things are happening. And then it says builds in a lower future profit margins and a smaller PE multiple than today, even while still using higher revenue and earnings than current levels. That's not interesting. What's interesting and what I missed is the credit card rate cap. I forgot about the credit card rate cap that was proposed. I don't know who proposed it. I just think Trump thinks he can say that credit cards have to have a cap. And obviously that's going to get caught up in the courts. But it says underscores regulatory and macro risk, including a potential credit card rate cap proposal and sector-wide credit concerns, as reasons the current price could sit above this fair value range. Anyway, I thought that was a nice reminder because I even forgot about the credit card rate caps when I wrote that post on Rigatoni Capital about American Express being interesting here on its pullback. So anyway, guys, good luck today in your investing journey. And thank you for watching. You can find me on YouTube, Spotify, Apple Podcasts, and you can find me on Substack under Rigatoni Capital. If you're watching this on YouTube, do you mind doing me a favor and just liking it or commenting on it. It was interesting that for some reason it only wanted to recommend one of my videos. It was the video on March 7th. And I did get a few views on it. And then all of a sudden, like this morning or over the last night, they stopped recommending all my videos. I guess that's a YouTube feature that it doesn't have to recommend your videos all the time. So I would appreciate any kind of comments or likes on the video if you enjoyed it, only if you enjoyed it. Thank you so much and have a great day. Bye.